Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management. Before we get to the FANGs, I have something special to announce. Last year, we had a free open webinar for all FANG Friday viewers, where I went over the science behind SVA and how you can use it to gain more confidence in the markets. A number of you did decide to join us as clients, and I think have had significant success this year. Well, we wanted to give all of you who are not clients of ours another opportunity to learn more about the inner workings of SVA. So this coming January, we will be holding another live webinar for anyone who is interested. If you want to secure your spot in the upcoming free webinar, then type your name and email address into the comments, and we will reserve your spot. Please use your full name and full email address. Otherwise, we cannot hold a spot for you. Last year, we were oversubscribed, but this year, we still have some spots available. So do it now. Looking at the FANGs in the past week, there's not much to say as far as any immediate concerns or changes. It should be, but there are some things on the close horizon that you should be aware of, and that's what we're going to look at today. But before we take a close look at the FANGs, as always, I do like to say thanks to everyone who likes this video and all our subscribers. Okay, let's start off with Amazon. And, well, what can we say about Amazon? It bottomed almost perfectly at its HB2. And the reason that I chose to reinvest our money into Amazon was because when I take a look at the 10-year view of the company, you can see that the HB2 was the long-term low, the valuation loan price to book terms for the company at 12 times book value. So when it got there again, of course, or close to it, it was time to be invested in that stock. Netflix, well, we had a sell on Netflix going through its HB4. The HB3, which was 16 times book value, failed. And of course, this against a background of much intensifying competition and indeed the disappearance of streaming opportunities for the company. So I thought that possibly things could work lower, and indeed the market appeared to think so too. However, of late, its entry into the gaming business appears to have given its investors new confidence, and the stock came back up to its HB3, broke out, and set back and tested that low as a good stock should. Basically, the technical analysis kind of action that you would expect from a confirmed buy, and the stock has been moving up steadily ever since. Alphabet has been my favorite stock for quite a while, and the stock has had a gorgeous run, actually all the way from its super growth price way down at 3.5 times book up to its bubble price, which is 7.4 times book. Now, coming up here, I thought, do I want to sell the stock at its bubble price? And I thought, I think I'll wait and see what happened. Then indeed it broke out. Well, I decided in that case we were going to leave it in our so-called phantom FANG portfolio. Well, the best laid plans of mice and men, the stock set back and indeed failed. However, I decided I think I better stick with this one, because I've got a good, comfortable feeling about this stock, and it has been higher in the distant history. Well, About all we can say is it's holding nicely at and slightly above its bubble price, and I hope it continues to do so. However, it remains in our Phantom FANG portfolio. Turning to Microsoft, which has been in that portfolio for quite a long while. Early at the beginning of the year, the stock broke out over its HB2, which is 12 times book value, and did that lovely technical action breakout, pullback, and then just hugged right along its HB2. Actually had another run and then pulled back and tested it again just to make sure that it was for real. And since that time has had a lovely run, almost reaching its HB3, which will be 16 times book value. And of course, the question is, what are we going to do at the HB3? Well, to answer that, I'm going to look at two previous events. First of all, what happened when it got to its HB1, and what happened when it got to its HB2. So let's go back in history and see. Well, here, by the way, is where actually we came in with our first FANG Friday YouTube webcast here. And here you can see the stock came up to its HB3, and look, for 6 months the stock would not break out. And we just had to basically tell our viewers at the time, just hold your horses, be calm, let's see what's going to happen. Well, late in the year, it actually finally did break out. Again, we had that nice breakout, which was, of course, a new high for a long, long, long time. Nice breakout, confirmed pullback, yes, and on we go. Well, let's skip forward. So here is that same event. Here's the breakout. Well, the stock indeed roared right up to its HB2, and of course, here now is the COVID-19 market meltdown. Now, at the bottom here, you say, well, the stock kind of turned in no man's land. What might have given you any confidence to have got back into the stock? Well, that, of course, was the bottom of the stock market in March of 2020, when the Standard & Poor's 500 bottomed precisely at its growth price. We had warned our FANG Friday viewers that that would be the case, and of course, I also very publicly on BNN, Bloomberg Television, alerted the viewers that a bottom was imminent, and I did that 2 weeks, I think, before the low on the market. Well, after that, of course, everything lifted up beautifully, and Microsoft came very, very strongly up to its HB2, okay, that's previous high. Well, what happened there? Well, this is kind of interesting. Okay, the stock came up, broke out, but just as quickly pulled back. Broke out again, pulled back, broke out, pulled back. My goodness. Back and forth, back and forth. Well, we call this sloppy trading. And sloppy trading is very often a precursor to a major setback in the price. So during this period, I simply chose to stand aside from the stock and not include it in our Phantom FANG portfolio. Well, in January of this year, what happened? The stock hit the HB2 again and broke out again. But this time on the pullback, look what happened. The whole trading pattern changed, and the stock held and held solidly at its HB2 before rallying again and testing again. But of course, as I said, now the stock is heading towards its HB3. Question is, what are we going to do there? Well, based on the past, one would be inclined, I think, to be taking one's profits at the HB3 and kind of sitting aside a little bit and wait to see what happens, because the HB3 is quite an extreme in valuation terms for this company. Nvidia, almost, well, not quite the same story, but of late it is the same story, because Nvidia, after having a beautiful bottom back in October, has had a powerful run, breaking through the HB5 without almost a moment of hesitation, and heading towards its HB6, which is 33 times its book value. Well, what do we do there? Well, one thing I can do is I can look back and see what history says about it. And if I do that, what I observed back in 2000 was that is precisely where Nvidia previously peaked. Now, I don't think that we're going to see anything like that sharp and powerful pullback that we see in this chart. But what I do see is an extreme, and I will have to tell you that the market has a memory. And I would be inclined, very much inclined actually, to be taking at least some money, if not all my money, off the table in Nvidia and watching to see what happens now. As far as Apple is concerned, earlier this year on this little breakout here over its HB6, and remember that's 33 times its book value, the stock broke out at the same time that Amazon was bottoming and Netflix was breaking out. So I thought, isn't this nice? And so is Apple. So I recommended, I think we got to buy the stock. Well, that turned out to be a little premature, and the stock indeed did set back. However, very recently, the stock has actually hit a new high. So my optimism for Apple was not misplaced. By the way, one thing you'll notice about the structural breakpoints for Apple is that they suddenly, after being down, have moved up very sharply. That's because we do not have a fresh balance sheet which will tell us what has actually happened here. The last balance sheet we had was in October, the end of October, and that confirmed that the downtrend was in place. That is to say that the stock repurchases remained in place, but doesn't tell us anything about what's to come, except that it is a clue as to what we may expect going forward. So as far as I'm concerned, I am very happy to be holding Apple right now. The last of the FANGs is Facebook, and you don't actually get much of a clue about the overall picture this is Meta. Much of an overall picture, except to say that the stock has been in a downtrend. It's been kind of marking time in a slight uptrend, but the stock is in limbo. Now, if I go back, okay, and now to the balance sheet as we previously saw it, we see, of course, that for the third time in 5 years that Meta had actually peaked right at its bubble price, and then, of course, as happened in the previous two times, set back. What do we do now? Well, I think to some extent, I think we wait and see what happens. I do not intend to go back into this stock at present until we get an SVA signal. In summary, it's pretty much steady as she goes with all of the FANGs. Amazon, Netflix, and Alphabet are what I would deem to be safe and solid for now. Microsoft and Nvidia are very close to reaching hard decision points when we will have to decide whether to fill or kill our holdings of those stocks. As for Apple, a year or so ago, I did a FANG Friday episode in which I laid out precisely how Apple could become a $4 trillion company. And by gosh, it looks as if they're trying to stick to that script. I'd hang in now, that's for sure. Finally, Meta, or Facebook as the case may be, is in regulatory limbo, and its future near-term pricing now depends on the degree to which its name change can paper over its egregious behavior. I told you that one of my investment management clients had ordered me to get out of this stock, and I have full sympathy with him. What you choose to do is between you and your own conscience, but personally, I intend to see what happens from the sidelines until I get a clear SVA signal to the contrary. As a last thought, what you do with the rest of your portfolio is up to you, but you know where to find me. And if you'd like to know more about how we can help your decision making, tune in to that free webinar in January, or just go to info@strategicanalysis.ca. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you